You have been told your whole life that the US dollar is untouchable. The world's reserve currency, the safest money on earth. The foundation that every American savings account, every retirement fund, every paycheck is built on. That foundation is being tested right now. In real time, here is what is happening. Iran has proposed that any oil allowed through the Strait of Hormuz, the waterway that controls 20% of the world's entire oil supply, must be paid for in Chinese yuan. Not US dollars, yuan. This is not a small statement. This is a direct challenge to something called the petrodollar system, the backbone of American financial power for the last 50 years. Let me explain what the petrodollar actually is, and why every American should understand it right now. Since the 1970s, virtually all oil traded on the global market has been priced and paid for in US dollars. Not euros, not yuan. Dollars. This arrangement, established between the United States and Saudi Arabia, created something extraordinary. It meant that every country on earth, if they wanted to buy oil, first had to acquire US dollars. Think about what that means. Every nation, every economy, every government permanently needing to hold American dollars, permanently creating demand for American currency. This is why the US dollar became the world's reserve currency. This is why America can carry significant national debt without the economy collapsing. This is why your dollar has had purchasing power far beyond what American productivity alone would justify. And right now, for the first time in decades, that system is being openly challenged. Not quietly, not diplomatically. Publicly, Iran has explored alternative oil pricing since the early 2000s. But this moment is different. The Strait of Hormuz is severely disrupted. Global energy markets are in turmoil. And China is prepared to absorb every barrel Iran can offer, paid in yuan. The question every American with savings needs to ask is simple. What happens to your money if the world starts buying oil in something other than dollars? Let's stop talking theory and start talking about what is happening to real American households right now. Brent crude oil, the international benchmark, has risen 43.7% year-to-date since this conflict began. That is not a projection. That is not a forecast. That is the actual number as of this week. The Dow Jones Industrial Average dropped over 400 points in a single session on March the 2nd. The S&P 500 fell 0.7% that same day. If you have a retirement account, that is your money going down. US unemployment rose to 4.4% in February 2026. The economy lost 92,000 jobs in a single month. That number was nearly 150,000 worse than what economists had forecast. Here is the part that hits closest to home. Financial analysts at one of the largest wealth management firms in the world have stated that real consumer spending begins to decline 2 to 3 months after an oil price disruption of this scale. That decline can persist for another 5 to 6 months after it begins. 2 to 3 months from now. That means by May or June of 2026, if this situation is not resolved, the average American household will be spending measurably less. Not because they choose to, because they will have no financial room left. Your fuel costs more, your groceries cost more, your utility bill costs more, and your paycheck has not changed. Meanwhile, the Gulf region collectively reduced oil output by 6.7 million barrels per day by March 10th, and by at least 10 million barrels per day by March 12th. 10 million barrels per day. That is the largest single supply reduction in the entire recorded history of the global oil market. Not the largest this year, not the largest this decade, the largest ever. And the response from the current administration? Officials have suggested the situation will resolve very soon, while simultaneously signaling that further action may be necessary if the Strait of Hormuz remains restricted. Very soon, while the largest supply disruption in recorded history continues to build. Here is where we get practical. Because knowing the problem without knowing what to do is just anxiety with extra steps. First, understand what is actually happening to your dollar right now. In the short term, the dollar has actually strengthened. When global markets face uncertainty, investors move into US dollars and government bonds as a safe haven. That is a normal response. It has happened during every major global crisis for the past 50 years. But here is the distinction nobody is explaining clearly. Short-term dollar strength does not equal long-term dollar security. If the petrodollar system continues to erode, if more oil gets priced in yuan, if more nations follow this lead, the structural demand for US dollars weakens. Not overnight, not next month, but over years and decades, and the direction matters. So what do you actually do? Number 1. Do not make panic-driven decisions with your retirement accounts. Markets have historically recovered during and after periods of geopolitical tension, including significant gains in the months following the start of previous Middle East conflicts. The pattern is consistent. Initial shock, partial recovery, then stabilization. Selling at the lowest point of a geopolitical event is how everyday investors lose money while institutional investors purchase assets cheaply. Number 2, take a serious look at gold. Gold prices have risen significantly since this conflict began, exactly as they do when geopolitical uncertainty increases and confidence in paper currencies wavers. This is not speculation. This is a pattern that has held for thousands of years. Gold is not an instrument for getting rich quickly. It is protection for your purchasing power when currency systems face pressure. Even a modest allocation, 5 to 10% of savings, can function as a meaningful hedge. Number 3, honestly assess your energy exposure. If you drive frequently, if your home uses heating oil, if your utility costs are high, you are significantly more exposed to this situation than someone who is not. Review your monthly budget. Identify where energy costs hit hardest. Make adjustments before prices climb further. Number 4, watch the Strait of Hormuz. When that waterway returns to normal operation, and the historical record suggests it eventually will, oil prices will ease, fuel costs will fall, and inflationary pressure will begin to subside. The current administration has indicated naval escorts for commercial tankers are being arranged. When commercial tanker traffic resumes at scale, that is your signal that the worst of the price pressure may be passing. The bottom line is this: the petrodollar system is not ending tomorrow. The US dollar is not disappearing next month. But a disruption that has produced the largest oil supply reduction in recorded history, combined with an open challenge to dollar-denominated oil trading, is not something any American with savings, a mortgage, a vehicle, or a grocery budget can responsibly ignore. Real Cost America exists because you deserve to understand what is actually happening to your money. Not the headline, not the spin. The real cost, subscribe. Because this is not the last time your financial life is going to feel the pressure of global events.